Welcome back, you lovely people. I hope you're having an amazing weekend. Please smash the like button if you are sick of the selling and the red in the crypto market. I've been feeling this community starting to get a little bit jittery, and that's fine. It's understandable. That's why we do these videos. That's why I put out the content, and that's why we're all here to support each other. So let's make sure that we all feel comfortable. We all know exactly where we are, and I will take you through that right now. This will be building on the content in the course. The 2021 Bitcoin Playbook is free. So if you are getting anxious about these moves in the market, it's very important that you go and watch that course. If you've already watched it, then go and watch it again. Now, let's have a look at where we are. Down just under 6% at $43,500. I made the video yesterday about our channel. Are we going to break to the upside or the downside? And we haven't broken it yet at all. We are still just consolidating nicely in this channel. Now we are heading down, of course, and that's not what I wanted to do. Let me try and extend this. You know, if we look something like that, it could be some time still before we break this channel. And in fact, the bottom of the channel may end up converging with our trend line, which we've had in place since the beginning of December. But time will tell. But what we are seeing still is a bull flag. That is a downward sloping flag in a bull market. The angle is fairly steep, steeper than usual, but it is certainly nothing to worry about. Now, you may say, you're telling me not to worry, but Bitcoin is down 26%, and it seems like every day that we see more red and more selling. So is it not time to start panicking? Well, let's go and have a look at the last cycle in 2017, which is our best frame of reference. And I just want to go on the weekly view. So here is 2017. Here's the beginning of the year. Just want to focus on each of the corrections in 2017, and then we can see how this one is lining up. Well, right at the beginning of the year, we had a 33% sell-off that happened over 2 weeks. Then in the beginning of March, so 2 months later, we had a 33% sell-off that lasted 3 weeks. And then mid-June, we had a 39% sell-off that lasted 1, 2, 3, 4, 5 weeks. So just to interject, if you think that 26% over 7 days is getting quite hard to handle, imagine 38% over 5 weeks. There's certainly a war of attrition going on there. And I expect us to have a similar correction during this cycle where it lasts 4, 5, 6 weeks. And what we're seeing now is really good training for that. I don't think that is now, and I'll explain why. I think that comes in a couple of months' time. We then had September, kind of the last one really, end of August, beginning of September. We had, let's call that 40% over a couple of weeks, 3 weeks. And then there was our run up to the peak after that. So what I'm seeing as a pattern there is that the average pullback was around 33%, with a couple slightly larger than that. And they tended to last 2 to 3 weeks, apart from one in the middle, which is longer, 5 to 6 weeks. And let's see how that lines up with what is happening this year. Well, you can see as we entered the year, just like last time, we had a 31% pullback that lasted 1-2 weeks. And now we are having as we said before, 25-26% currently. And we're just about to close out the first week of this correction. Actually, tonight in 6 hours' time will be the end of the first week of this correction. So it would be very normal for this to go into a second week, and that is what we're looking at doing at the moment. And an average correction is probably somewhere between 2 to 3 weeks. I believe this one is going to be shorter. Let's call it 1 to 2 weeks. And why do I think that? Well, I'm looking at the angle of our correction so far, and I'll come down to 3-day view for this. So I'm just looking in a very in a very basic way. I'm looking at the angle of this correction, and you can see this is quite sharp down here, especially compared to the one we had at the beginning of the year, which is more like this angle. And of course, the angle of the pullback is going to impact how long it takes, because if it's a very steep pullback, it's going to be very difficult for that to last 3, 4, 5 weeks without us going very, very low. And of course, we're not expecting that until the cycle peak. So it's sharp. And if we look back at 2017 again, just to see if we can tally that up with what happened in 2017, where you can see, you know, when we brought in the year in 2017, I would call this a sharp correction. That was the one that lasted a couple of weeks. And then we had one here, which was less sharp. That was in March. This one is very, very sharp. It actually was only 3 or 4 days. And this was essentially, you know, the sharpest pullback that we've had so far, 32% over a couple of days. And then we had the one in the middle of the cycle, which is certainly not very steep pullback at all. And then as we head up to the peak, this one actually looks quite similar to what we're experiencing now in terms of angle. So I just want to pick them out, and I want to pick them out to demonstrate the likelihood that this is not going to last a long time. I'm expecting over the next few days for us to really see the bottom here. And where is the bottom going to be? Well, just want to come down to the 1-day view, because I just want to note, if I look at 2017, what usually happens. And this happens for a good reason. See, in 2017, here is our first pullback. I want to look at the last candle here, the last red one, before we start moving upwards again. So in 2017, the last day of the correction was about minus 15%. So we're down 6% today. So nearly 3 times that amount in the last day. If we look at this correction here, you can see the last day was, call it 10%, went down a little bit the next day as well. You could call it 12%. So a very steep sell-off on the final day. This one that happened very quickly. Naturally, the last candle was down at 19% at one point. And you see the sell-off that lasted 5 weeks or so. Not so much at the end. You know, this, like I said, this was very much a war of attrition. And therefore it was just selling, selling, selling all the way down. The last candle was actually quite small. And then as we head up, you can see the one in September. The last sell-off was 16% in 1 day. And even on this little one here on the way up to the top, you know, this candle is minus 8%. So what you tend to see at the end of the correction is that last day is a major capitulation. That is the height of fear and fear-based selling. You can imagine now those that are not listening to this channel and have been holding on, and they're starting to read the FUD in the papers, on social media. In the papers, do people read papers anymore? On social media. And they finally give in and they finally capitulate. And that results in that final sell-off, which is the last of the weak hands, the last of those that will sell, do sell. And then the Bitcoin can put in a bottom. And then at that point, we have buyers. More buyers than sellers means the price is going up. Based on history, historical price movements, historical corrections, and just market dynamics for any investment, I would expect to see that happen. Is that happening today? It's possible, right? We are down 6% with 6 hours left of the day. And I'm looking at a couple of levels here. Before I put my drawings back on, you can see that the last swing high, when we went up to $40,000, so that was the last high before we headed up to $58,000. You can see that that level is in here. In fact, I'm gonna draw that in. We got a bit messy there. I'm gonna draw that in with my brush here. And you can see if I hover over it, that is at $40,500. That is quite a good technical level for us. We often do go in and retest the previous high before resuming outwards. So that's about $40,500. And now my other drawings are back up, and I'm just going to make this really clear. I want to get rid of that on that for you to make it easier. So now you can very clearly see our trend line, which we've had in since December. And I'm going to make that darker, lighter even. So I want you to see that really, really clearly. And you can see that we touched here in 11th of December, and then we touched in again here on the 28th of December. We then had our big run up to $58,000 where we left the trend line, and now we're coming back in, and we're starting to look like we might test that trend line again. Now you can see also we've got the confluence of that swing high in here at $40,500. And you can see we are now creating an area which I'm looking at very closely. I'm going to put this in a different color. Let's do this for now. So if I just put that in green to make it stand out. So this area looks very, very strong for us technically, and is the area I'm looking at. This would give us a pullback of somewhere in the region of 31 to 35%. And as you know, based on everything we just looked at from the previous cycle, that would be a very, very standard correction for us. So this is starting to line up and look like we've got a clear target on the downside. Could we see that today? I do see the market continuing to sell off. Well, you know, if we had that final capitulation today, we would end up having a candle of between 12 and 16, 17, 18%. So again, that would look very, very similar to what we've seen previously. And I'm pointing out these levels for you and numbers to make you very comfortable if and when we see it. This trend line, if we reached it today, we could be looking at somewhere like $37,000 to $38,000. You know, that is a big correction today. That would be 16, 17, 18%. Or perhaps what happens is that we consolidate for a few more days in our channel and then have our final capitulation in here. Impossible for us to say what day, how much exactly, and how this is going to end up. However, what we can say with a high degree of certainty is that this is completely normal. We've seen it. I haven't gone back to the previous cycle in 2013, but we had very similar movements. This is very, very, very standard, very normal, and it's what we signed up for. It's what I've been preparing you in videos, social media content, and the course for these situations. So I want you to be able to watch it unfold without being stressed or anxious. And most importantly, to not make that fundamental mistake, which would be to sell some whales, your Bitcoin, at this extremely cheap price. Because as soon as we put our bottom in, whether that's 37, 38, 39, 40, 41,000, that's my range for what we're looking at for the bottom. Well, from that moment, we're looking up to 60, 70, 80, 90,000. So here is the time, if anything, to be accumulating. I know the vast majority are fully positioned, in which case it's the time to hold and the time to really take a step back and gain that perspective, which hopefully I've shown you in this video. I definitely show it in detail in the course, so go watch it. And we'll continue monitoring this over the next couple, well, as long as it takes, of course. And we're all exactly where we need to be right now as a community. The studying we've done, the research we've done, and the mindset that we've developed in order to ride this out, in order for us to get to August, September, October, and have navigated this bull run successfully. And it's days like today, weeks like this week we've had, and maybe next week, which are the true tests. So we're in it together. Stay positive, and I'll catch up with you tomorrow.